Hi there. Greetings of peace to all of you, my dear students, professionals, ladies and gentlemen. Welcome to this video on the CIMA strategic case study, Hottayr pre-scene. The context of this video will be around the topic of risk, right? Risk management. And I want to try and explore this concept of risk in relation to Hottayr. And I'm going to break the video into three parts. The first part is we are going to have a brief look at a summarized version just to get the insights of how the principal risk register of Hottayr looks like, and what does it actually try to communicate to us. The second portion of the video is going to be just a simple take on the core activity of risk, the nature of the questions that you can get on risk in the CIMA strategic case study exam. And the final aspect will be a number of scenarios, but very broadly looked at, just to give you or just to prepare you in a certain sense only in various possibilities of what can really occur as far as risk is concerned. But the way I approach the case study, the way my coaching is quite different. So you will see that reflected across this discussion. Let's have a look first at the pre-scenes risk register, but especially from a snapshot angle. What is exactly the CIMA examiner trying to communicate to us in the risk register? So what we know so far is that they've looked at 7 main risks. They've identified those as the ones that are most likely and most impactful. And this is a very important concept, because what will happen generally in the risk management process is that given that Hottayr does have a risk management or risk committee comprising of independent non-executive directors, that means that there is a risk management team, right? It may be purely based on an executive membership, or it could be at a very high level, or it could be anything between a department, right? A complete department for risk management. We don't have that view, but given that there is a risk committee, there is definitely an executive branch that is reporting to this committee, that we have to understand. And what has happened is that that particular team, including a risk manager, will have identified all the possible risks that the company is exposed to. And by presenting this as your snapshot of the principal risk register, what they're basically saying is that these are the risks that they've identified as the most likely and the most probable, right? Most impactful in your risk mapping. You know this, right? This is how you do your risk rating. The highest rated risks are the ones that are highest, that have the highest probability, and the ones that have the highest impact. Okay, so let's quickly run through them. I'm not going to take a lot of time here in looking at them in very detail. They're pretty straightforward if you look at it. The first risk is that the products themselves are expensive, affected by economic cycles and consumer confidence. So fair enough, but that's a very broad risk, and it's a macro aspect to look at it, to approach the risk. It's a risk that can have a mix of controllable and non-controllable elements in play. And what they've done to mitigate this is basically mitigating by diversifying their sales channels, their revenue channels to multiple markets, right? So essentially what they're trying to do is that when one market is doing poorly, they will have another market that is doing well, right? So that's what diversification in essence tries to do. The second is the vulnerability to credit risk. So here we're talking about the fact that there is a base of customers, and I have to remind you that Hottayr is if I ask you, is it B2B or B2C? Right. Straightforward answer, B2B, right? Because you realize that we supply the third parties, the middle members of the channel, of the value chain. We don't really have a retail arm. We don't do retail sales directly for the moment. That's always a possibility. It's an option that is available, which we generally look at in the strategic options. But in this case, as a B2B business, given that energy suppliers and home builders and contractors and a mid-size, small-size suppliers, plumbers, construction firms buying from us directly, we are exposed to credit risk because, as you know, these are bulk purchases, and it's very unlikely that all of the sales is happening in cash, especially in the construction market, right? Most of the time, these are mortgage markets, or these are, housing loans are involved, so you don't really get the full payment upfront. So these are serviced over time. So in such a situation, of course, there is a huge credit risk involved. The housing market is such that. So what they've done is again diversifying by into multiple markets. That seems to be one of their go-to strategies. Being a multinational company, perhaps it was a ripple effect. Perhaps it was not something that was done intentionally in order to face the risk itself, because going global is one aspect of growth. So as the company did that, as the company took the initiative to become multinational, what it in turn has done is that it has acted as a mitigation approach to this particular risk as well. But in addition, of course, in credit management, they have credit limits to existing customers, depending on a certain credit rating that is given, and credit checks are done on new customers. Pretty straightforward, very legitimate, very reliable, I would say. At a very basic level, this is a reliable approach. You have credit limits to your current customers, and you impose, or you make your new customers go through a serious credit check. And well, your risk is only well managed as good as your credit limits that are imposed. Because of course, you play around with that limit, or you have a higher flexibility around that limit, or you have a poor guarantee for that limit, behind the limit, to back the limit up, then of course you're going to have issues. And also with the credit check, it's only as good as the check itself. And because of course, if there are fraudulent information that is being presented, and if our company and our credit check process cannot really verify in a very rigorous and authentic sense, we are going to have issues. And these are all possibilities in the case study. So keep your eyes open. The third is volatile cash flows due to revenue fluctuations and currency movements. So essentially, this is again a risk that is coming from a pestle factor. It's something that has a huge amount of non-controllable elements attached to it, because it's fundamentally and broadly an economic risk. But given that we operate in multiple markets, we are exposed to this. This is a serious condition to really consider, especially if our foreign currency exposures have pitched us against weaker currencies. And as a result, we are doing poorly in terms of currency management and cash flow management. You can't be selling on credit for bad markets for long durations. That's definitely not sensible business. So treasury, there is a central treasury team, and what treasury does in this case is that they monitor, and they're basically doing what they're supposed to do. They monitor and manage the cash flow and currency exposure. Okay, the next is the vitality of employee contribution. So essentially, it's the concept that our employees are really important. For example, the quality, right? The focus on the quality, I've discussed this elsewhere, but the focus on the quality of products for Hottayr is huge, right? We have taken serious measures to enhance quality of our products. So in such a situation, even if you look at the factories, we have a large number of quality inspection workforce taking care of quality alone. So in such a situation, employees do play an integral part of this company's products and services. And as a result, they are very important. And understanding that seems to have been one of the biggest risks. I think I touched on this. It's a little, because the way it's mentioned in the principal risk register, the risk is not really brought out. But what they're basically saying is that we are heavily employee dependent. That's what they mean. That employees leaving suddenly, high skilled employees leaving suddenly, especially a large workforce, union related issues, labor strikes. We are exposed to all of that. If a company is accepting the fact openly in their principal risk register like this, saying that, look, our employees are vital, right? That is a good sign, but that is also a sign to say that they are really scared of their employees. So they want to take care of them because they are heavily dependent on them. And they do have monthly HR meetings with employee representatives to understand what's going on, to resolve their issues, it's a positive measure, I definitely would say, because when it comes to employees, the best thing you have to understand is transparency. It's communication. You communicate with your employees well, you maintain a strong level of transparency, things go well. And the other is that the company itself has or provides excellent training, funding for part-time study, and enables promotion, right? So these are the standard things any company can do in order to make sure that their employees feel valued and their employees feel that they're growing, and that that they do feel like they have a future in the company. The next is reliable pricing and steady availability of material like steel, copper, aluminum, semiconductors, etc. So again, right, this is slightly linked with the cash flow risk, because you can even call it commodity price risk, right? Because if you're purchasing these commodities, then you're exposed to the commodities market, and especially raw materials like steel and copper and fuel. You know how it works, right? It's a very volatile market. It's heavily demand and supply dependent. It's not as well regulated as any company would like to do or like to be. These minerals and these are sources, or these are energy sources and material sources that are non-renewable in most cases, and that makes them even harder to deal with. So in such a market, in dealing with such a set of commodities, we have to be very careful, and we have to understand that the depth of the impact it can have can be like a set of dominoes, right? Because it is directly linked on the one side with your cash flows, because you've got to source the material to get your products out, and on the other side it's directly linked with your product availability, right? Because you cannot really get your product manufactured and out there without this. So both from a logistical and a continuous supply chain angle, and on the other end from a cash flow management angle, this is sensitive. So we pay close attention to the markets for commodities, and there is strong relationships with key suppliers, right? Both of them are strong points. Of course, with the commodities market, you can pay attention, and you can basically try to make sure that your treasury, for example, you can have commodities related analysts employed, experts, maybe consultants, to make sure that there is hedging, that there is cash flow risk management processes embedded within the overall risk management process, to make sure that that we do keep getting the benefits of getting the benefits and offsetting any negatives when we are dealing with these purchases. And of course, strong relationships with key suppliers. Of course, that's definitely an obvious and a very, very important point to mitigate that risk. If you or I were purchasing, this would be very important that we do have reliable suppliers and that our relationships with these suppliers are strong. Vulnerable to changes in legislation relating to emissions and safety. So that there is combustion involved in the product. So that definitely makes it a vulnerable matter. We want to be sensitive. I want to remind you that Norland itself as a country has a 2040 target, right? It has a 2040 target, a net zero carbon emission target, and that makes this even more serious, because we want to be on the forefront, as we currently seem to be, of dealing with carbon emissions. So In order to mitigate this risk, we fulfill all applicable legal requirements for emissions and safety. We pay close attention to proposed legislative changes, and we work closely with legislative agencies to ensure proposals are realistic and proportionate. You see why it's important, and when we did the research, if you're part of the program, you would have learned that when we see that a lot of companies that are in the mainstream arena in energy, right, in energy of the world, they have a very strong connection with a lot of governments are working very, very closely. Even the recent G20 summit, the whole ha-ho about the climate action pacts and everything that is being done for climate, the biggest sponsors were the energy suppliers, right, the fuel, oil and gas manufacturers, etc. So extractors, to be politically correct about it. But what we basically notice is that these companies attempt to lobby, attempt to have a ongoing conversation, to actively influence legislation that is coming around. And say, for example, if they feel that a 2025 target is going to hinder them, right? I've seen this literally in my country as well, where a polythene ban legislation was, nobody knew how it even went away, right? So because it is directly linked with a multi-billion rupee market, and of course a ban like that will have severe repercussions on a lot of people, businesses, employees, etc. So there is, it's a wild game, right? That nobody that we should have never started in the first place, but here we are. So you have to understand that there is room within the ethical framework to deal with these risks in a legitimate manner, especially when you're working with the government, and that makes our exposure to political and legal risk higher. And we do alter product design to ensure performance exceeds upcoming changes in the law, essentially making sure that we are 2 steps, 3 steps, 5 steps, I don't know how many steps, but whichever case it may be, we want to stay ahead of the curve. We want to stay ahead of the game. And if there is legislation that is coming up, we want to stay on top of it. We want to make sure our products are well ahead, our products are compatible, because we don't want to go out with a product, a major launch, and then 2 years later, because of legislation, announce that we are doing a recall. That is definitely not the way to go, because that starts a whole amount of risk, from reputation risk to cash flow risk, because you're just spending money to recall the units that you probably spent billions to manufacture in the first place. Consumer demand is affected by concern for the environment, and that is essentially, again, right? So something that we consistently notice is that uncertain element and the uncontrollable element with these risks that they've identified, and them deeming, or the risk team deeming, that these are the biggest threats and the biggest risks that require or necessitate inclusion in the risk register, says something. So consumer demand is affected by concern for the environment. It is an upcoming risk. It's something that consumers are nowadays slowly getting more and more sensitive about. Products are designed aiming to minimize carbon emissions and harmful refrigerants. And I'm not going to go into a discussion about how refrigerants can harm CFC, hydrofluorocarbons, all of that. But our products essentially making sure that the utilization of refrigerants are at a minimal is one of the best ways, and educating consumers on the benefit of replacing outdated boilers with newer models and heat pumps, right? Even profitability wise, it's good, right? But also environmentally conscious wise, heat pumps are definitely the better choice. We see that when we've done the research, when we've read about residential heating devices, we understand that heat pumps is one of the most economical and efficient, and something that is durable for the long-term products. So it's definitely something to be happy about and to work on, right? And also with the aim to minimize or eliminate carbon emissions, what we realize is that it's the way to go. So somehow even including this in the principal risk register makes business sense, right? It makes business sense because one of the mitigating aspects also is something that directly drives revenue, because the more you are able to educate your consumers, the fact that it's here means that it's being taken seriously. And if it's being taken seriously, it means that the company is actively doing something. So if the company is actively educating consumers, what does that mean? It means essentially that the company is working on something that will help the company grow revenue by means of selling more heat pumps and having more heat pumps installed, even in those houses that may be inclined not to outdate, because they're educating them. They're telling them that these are the reasons, especially in a market where consumers are conscious about the environment. So there we go. That's the risk register. A look at the risk register. Even though it is an overview, we've done a good analysis. We've tried to absorb and develop an excellent understanding of the risk register. But as I reminded to you earlier also, this is only what most likely the risk management team of Hottayr has promoted as the most likely and the most impactful risk factors that their business is considering. The story with respect to the overall risk management approach and overall risk management strategy of Hottayr is really altogether huge. So, as I said in the video at the beginning, this video I've tried to divide it into 3 segments. And one of those segments we just completed, that was looking at the risk register. The second is just a very simple explanation of what you will be expected to do in the exam as far as specific risk is considered. So when we look at risk, the fundamental test that CIMA is trying to implement upon you is co-activity D, right? That's where risk starts to play a part. But co-activity D in itself is a huge co-activity. There are other elements to it, like corporate governance and ethics. However, when you look at risk alone, there are mainly 3 things that you might be expected to do in the exam. The first is evaluating risk. So what does exactly evaluating risk means? Well, before I try to, shed some light into it, let me tell you what the 3 things are in a nutshell. First is evaluating risk. Second is managing or mitigating risk. So evaluation and mitigation are 2 different things altogether. And the third is dealing with risk in the risk register, right? What we just looked at, right? Because as you said, or as we learned, there is a certain process behind what goes into and what doesn't go into the risk register, and what exactly we record in the risk register. What kind of information do we include and not include in the risk register? This process itself is a science, or at least the P3 syllabus tries to portray it as a sort of, as a academic science that really needs a little bit of studying. And that is what CIMA is trying to test here. How do you, or can you evaluate risk? Can you come up with risk mitigation and risk response approaches to various possibilities and potential incidents that can happen, that the examiner can throw at you? And finally, can you deal with the risk register? If you're good at these 3, right, if you have a certain level of confidence that you're good at these 3 aspects, then I assure you in the exam, whatever question that comes up, whatever question, it's either going to be one of those 3, right? It's either going to be to evaluate the risk of a strategy, of something. They might just be very broad about it. They might just say, let's have a quick chat on that. What exactly does evaluate risk means? In a nutshell, what it means is, can you or are you able to look at a risk factor or identify a certain risk or take a risk that has been identified and really explore the extent of impact it can have upon the business, right? What kind of damage can it cause? Is it short term? Is it long term? Can it affect our reputation? How can it affect our reputation? What kind of approach do we need to take when we deal with it? You have to really be careful, especially when it comes to matters related to reputation and share price, because that's a very common theme, a recurring theme that you notice in the CIMA strategic case study exam, where something goes wrong, and then next question is how can this be a risk, and how can this play out negatively in the perception of shareholders, in the perception of the market, and what will they do, what can they do? So these are questions that you need to be like this. They have to be second nature to you, right? They have to be very automatic. So evaluating is necessarily just being able to determine whether a risk is going to be high impact or low impact, and how you're going to navigate that sort of environment. The second is managing or mitigating or responding to risk. So that's outright solutions, outright solutions. It's very straightforward questions. When that is being tested, they'll be very straightforward, and they'll say, or the scenario has been laying out a bad picture or something that has been going wrong. Or in the first task, they might actually start off with a very positive note saying, look, we are going to acquire this company in this country and everything's going smooth, and they ask you a couple of questions around that. And then you enter the second requirement, second task, and you're suddenly reading 3 months later, it's today, and things have gone wrong, and these players have done that, or that company lied to us. Now we are in trouble. We've made the investment, and the government is responding to us very negatively, very poorly. Customers are angry. Something went wrong. Maybe connectivity, maybe hacking, whatever. So now exactly how do you deal with this? So that actually also reminds me that you have to have a more specific focus on cyber risk as well, right? If you feel like you're not good with cyber risk, just brush it up. Okay, just brush it up. It's very important, and being aware of all the kind of angles, all the kind of possibilities around cyber risk is something that is very important. I can mention things like phishing scams and social engineering and ransomware and basic hacking, straightforward hacking, network hacking, viruses, those kind of threats. So there's a lot that's going on. So you have to be aware of those, and also the response plan. How do you deal with it? So that is the second aspect you have to be really good at if you're someone who is taking the strategic case study. And the final is the risk register itself. So to start with, it is somewhat of a theoretical concept under corporate risk management. So I would suggest you quickly go into that area. Try to recap the risk register, the format of the risk register, basically what kind of information you would include, and how do you determine between a risk that deserves to be in the risk register and not. Because I can tell you this, like a common question that you generally see in the exam is that there was something goes wrong, and then they say it was not in the risk register. You don't really see it. Right? Something happens that you don't see in the risk register of the pre-scene. And then they ask you, shouldn't the directors be blamed for this? Why wasn't this included in the risk register? Maybe the chairman or someone, they're mad, they're upset, they're angry, and they're blaming. They're trying to blame the board of directors, saying, why wasn't this included in the risk register? If it had been included, we would have taken measures. We would have, taken preemptive measures to face this. But because of your fault, you didn't include it in the risk register, and now see, here we are. What is your excuse for this? So you have to defend your story. You have to, because you are writing on behalf of the board of directors, for the board of directors, right? So you basically get the opportunity to look at both sides of things. So again, in such cases, you see how the risk register becomes the integral part of that question, because the question starts with the fact that it was either mentioned or not. If it had been mentioned and yet our mitigation measures didn't work, that's also an issue. If it had not been mentioned altogether, that's also an issue. Right? It's an issue all over. right? That is how the exam or examiner can approach you, can attack you. So you need to be aware of all these three aspects. You need to be good in all these three areas, because there is absolutely no guarantee that there's absolutely every guarantee, my bad, every guarantee that coactivity D will be tested, and there's at least a 30% chance that the coactivity D test is a risk aspect test. There is going to be risk from that coactivity alone, I'm saying, right? Not the entire paper. And in that, I guarantee to you, you will get questions either in one of these three: evaluating the risk, managing and responding to the risk, and or dealing with the risk in the risk register. Okay, so that's the second part. Just a quick recap on how you need to perceive risk. And that brings me to the final segment. And in this segment, I just want to have a discussion about the kind of risk possibilities. So I have a set of notes with me, and I'm not going to display it. But what I'm going to do is I'm going to try and talk about roughly about 10 to 15 kinds of risks that we can face. So obviously, the first one is in terms of macroeconomic risk. That could be economic changes, social changes, laws, regulations, taxations, any kind of macroeconomic impact. Maybe you entered a new market and the political scene there is changing, the government is changing, Nolan's government might itself be changing. There might be legislation that is trying to block you from launching a new product. Maybe it's harmful to the environment. Especially there's a insight into the environmental aspect of legislation here, because of the whole net carbon zero emission targets and everything that we are trying to do in trying to becoming an entirely renewable energy source based company and zero carbon emission company. So there is a aspect of risk that comes from a macro perspective, right? Economic, social, all of that. The second is very important and a high possibility, because we do know that Hottayr is a company that is working across borders, right? We are a multinational entity. We have a presence in multiple currencies, multiple countries, and that exposes us to foreign exchange risk, right? Very simple, very straightforward. So it in itself can be a major factor, a major risk aspect. So you need to be very careful, and you need to have a good hang of how to deal with forex risk, the kind of things we have in place. That we have a treasury. We know that our exposure can be managed. You do know that there is a commodity market aspect, right? We deal in commodities, and there is a commodity market risk aspect into the business, which in turn links to forex, right? Because we might not be paying in our home currency itself. If we are, and in some cases maybe we are, that would mitigate the risk, and or at least make things more certain for us. But usually that doesn't work out that way. If the US dollar is a currency, for example, that we're dealing with, which is most likely a stronger currency, then that particular company, that particular country would not want their sales to be generated in a foreign currency, unless they have foreign operations which they want to fund through the end dollar itself. So you want to be aware of dealing with forex risk. The third is, of course, a major aspect, that is the share price related risk. So when I say share price related risk, most of the time it is also very closely linked with reputation. But any kind of threat to the share price of Hottayr will be perceived as a major issue, a major problem. So you need to be very careful. You need to have a good understanding of how the stock market works, how we need to manage, how as the board of directors, because one of the fundamental jobs of the board of directors acting as agents, good agents to the company, is that they need to be managing the value of the company. And how do you manage the value of the company? The market value of the company is essentially the market capitalization, that is the number of shares in issue into the share price per share. So in that case, if you manage the MPS well, and you do know that we have the share price history, you do know that it's a separate discussion which we've had elsewhere, but you do know it's a very fluctuating story. So with respect to share price, if that is going to get tested, it could go either way. It could go in a positive direction, it could go in a negative direction. They've kind of kept it open with the 1.1 beta, clearly indicating that this is a bit of a risky stock, but a high return stock as well. And the share price history also indicating that things have been, whenever that we have continuously seen dips in the share price, but every time that happened, we've been able to come back and we've been able to recover. But that story also means that we are exposed to a lot of uncertainties, right? So that can easily be used as a tool to come up with a scenario and put you in that situation. The fourth one is the balance of supply and demand, right? And the impact price and volume has, along with procurement, along with the downstream or rather upstream supply chain aspects, especially from the commodity side, which I roughly touched on through the forex point. But overall, the business is entirely dependent on how we manage the supply and demand, and how we price our products, how we make sure that the product is available. You do know that now, for example, you do know the Sony PlayStation 5, right? One of the most sought after products in the world today. There's no stock, and you don't have stocks. Right? It's very difficult to get a hold of a brand new one. There's waiting lists of longer than 5 months, 6 months, etc., etc. So in such a situation, you do realize that there's a risk involved, especially because if they can easily build a scenario where the commodity is unavailable, and then you suddenly have a product shortage, a volume shortage. You have demand, you don't have units to sell, you're unable to supply, and that in turn is causing problems and causing issues. You've got issues with the suppliers, because you're basically not very positive about why they haven't been able to fulfill your requirements, whereas you also have angry customers who have been waiting for your product, right? It could be house owners, house builders who built the house, who finished the construction, but they are unable to just complete the final touches of the house, like installing heating, because you just don't have the unit to sell them. Big problem. So that's definitely something to consider. The next one is it's a very straightforward one. The risks related to funding, right? Procurement of funding, finance. It could be from the debt angle, it could be from the equity angle, because you might generally see that there is a positive image that there's something good going on with Hottayr and Hottayr's finances, especially when you look at the financial statements. But the examiner, you have to understand, the examiner will easily use a couple of paragraphs to paint a bleak picture and turn things nasty for the company, right? On the exam day, you get it. It's just, a few sentences are enough to say that something like, we are at the brink of breaching the debt covenant. Okay. Just one sentence, and you realize the 200 million we have in debt is already at cap. So that makes debt as a source of funding really unlikely. Okay, unless it's high interest rates and high exposure to finance cost and impact to interest power, and those kind of things start playing out negatively. So you have to be open to all kinds of possibilities. But overall, the challenge there, or the skill there, is that you have to have a good grasp of how you can deal with sourcing your company finances through equity and sourcing your company finances through debt. And in the exam, you choose whatever is relevant and deal with the scenario accordingly. The next is that there is a huge amount of intellectual property, because we are into research and development as well. So that's a big part of the business. So patents, licenses, intellectual property, There could be issues like patent infringement, disputes, etc. So that could always be, that could easily play out as a thing. It's a possible scenario, definitely. So you need to have an eye, and I'm very specific. I'm not talking general scenarios. I'm only trying to tell you, I'm only trying to show you the possibilities with respect to risk scenarios. What kind of risk situations can occur, can crop up in the exam. That's the only purpose here in this video. So how do you really deal with intangibles? How do you deal with intellectual property infringement or dispute related cases? What is the legal blowback? How can you deal with the reputational blowback? Especially if you have a situation where you've caused an infringement, you've done something wrong, or someone else has done something wrong to you. Either way, right? It can play out as a risk. The next is a little bit of a focused issue, and it's very important: the environmental sensitivity of consumers, things like environmental regulations, and the rise of environmental issues overall. So there could always very easily be a scenario of our products and our services and our company being involved in a incident where it is quite negative. You have to be, you remember that we deal with refrigerants, right? Refrigerants in our systems. So what if we launch a product? Just an example. What if we launch a product and that series of products, there's a leak, right? There's a leakage in the refrigerant storage unit. And because of that leak, unknowingly, as it also becomes, the refrigerant becomes vapor when it's exposed to outside air and room temperature, we haven't been noticing it. So only after the launch, after a few months, we really noticed that the refrigerant has been leaking and we have to go for a heavy product recall. But the other issue is that because of the time it has taken for us to identify the issue, the amount of refrigerants that were exposed, that were sent out to the air, is huge. And now all of the environmental organizations and environmentalists are bearing down on our company because we did not really, even though we have quality testing and all that, we failed at launching a product and we failed at making sure that safety was a high concern to us because of this incident. One incident. 55 years or 60 years of reputation down the drain because of one faulty unit, one faulty product. It can happen. So that's just one scenario of how this whole thing can play out as an environmental risk scenario. Be vigilant. Think about it. Think about evaluating such a risk. Think about mitigating and managing and responding to such a risk. And think about how you would deal with it in the risk register also. Relating to that, product defects and services are one aspect. It can easily play out. It's a very simple and straightforward risk scenario, that your products are faulty, or your services that you provided to customers, the technicians you sent to homes, they do some blunder, or there is an issue with a particular customer during a service repair or service run, and how that can, really, maybe someone posts something in the web and that goes viral, and overnight it has become a huge issue, even though it's really not an issue. How do you deal with something like that? Your reputation is at stake, etc. Okay, so technological change, right? Especially factors like the development of products, new technology, manufacturing technology that you're using because you have two large factories and maybe even new factory openings are being considered, and the time to market of products. So in all of these aspects, in all the various aspects of how technology is being utilized, we are exposed to risk, both from a cyber risk angle, but also a physical, a tangible risk aspect of technology failing, of us being unable to deliver exactly what we aspire or what we set out to deliver in the first place. Another aspect is a possible risk scenario is any kind of organizational change in terms of, it could be business restructuring, it could be a culture related issue, but something internal, something related to the current skeleton, current structure of how your organization operates, the culture of the organization, and perhaps even an initiative to restructure, initiative to revitalize your company, something that goes wrong. You're trying to implement something like the TPS, the Toyota Production System, or lean manufacturing into your factories, and then how does that work out, or BPR. Then you go for this radical change initiative, and then how does change management work out there? Are the employees dealing with it well? There could be situations where employee responses are quite negative. That can be a huge issue. So you have to be kind of careful in that aspect. Incidents related to information security. So this is just a specific point I wanted to mention, because I've already talked about cyber risk, right? But cyber risk in itself, broadly, it's a huge aspect. It's mostly in terms of hacking and in terms of entry into your system, in terms of stealing access or getting access into your system. But another important aspect is the information itself, data theft, data privacy, those kind of data management failures, data sharing failures, data accuracy or data integrity related issues. So the information you're generating in the company, the data security aspect, so how is that information being managed? What are the kind of risks that that information is exposed to? How do you really deal with that? It's overall, it's related to the digital strategy of your business and the information management system of your business as well. Okay, so in addition to this, any kind of, well, this is a little unlikely, but what we call acts of God, like earthquakes, typhoons, fire hazards, tsunamis, tornadoes, and all kinds of things. It is unlikely, because when something like that happens, the kind of business related angle, because it was inevitable, right? So the kind of pressure, because especially in terms of the blame game, it's very difficult to blame someone for a tsunami, right? So it's only, so if that kind of question is being tested and that kind of scenario is being played out, it will only try to check, especially from a response perspective, how do you manage something like that? How do you respond to something like that? Otherwise, in terms of risk evaluation, unless it's just a status evaluation, like a overview, like getting a snapshot of what's going on, other than that, accountability is not a issue that will be looked at if that kind of scenario is considered. In addition to that, terrorism, war, pandemics, etc. But of course, that aspect, you have to, like, and living in today's day and age, right? This world, these are not unfamiliar events for professionals. Every time we switch on the news, there's a war, there's a tsunami, there's an earthquake, something is going on, and we are quite, I think we have heard plenty of that. We've read so much of it that I'm sure that you will be quite comfortable responding in your best ability to such a situation. And finally, I would say behavioral risk. And by behavioral risk, I'm referring to the board of directors. Okay, so this has an ethical aspect as well. But ethics, as I earlier mentioned, ethics is one separate concept under coactivity D. So ethics getting directly tested is a different matter. But as far as risk is related, a risk scenario easily could be a misbehavior or unethical behavior of a director, of an independent. It could be an independent director, it could be a executive director, it could be a someone working in the team, so a senior manager, but having a bigger effect, having a ripple effect on our company. So that is definitely something for you to consider as well. You need to be able to look at such a situation very objectively and not be unfair to someone if they are being blamed in that scenario, maybe a newspaper article blaming them in a derogatory way, but they actually didn't do anything. It could be that, or it could be something where they actually did something, or it could be something of a mistake. So somehow, whenever there are negative behavioral impacts or influences being tested, there is definitely a response angle and an evaluation angle that CIMA can easily test you on, and we have seen this time and time again. So with that, that's essentially a snapshot. That's essentially a good look at the kind of possibilities we looked at. About nearly 15 altogether, about 15 potential risk scenarios. And as I earlier said, just want to reiterate the fact that it is important that you develop the skill of in three areas as far as risk is concerned: risk evaluation, evaluating the extent of the risk mitigation, risk response, and dealing with the risk register. Those are the three main skills as far as risk is concerned. So that's the video, that's the segment, that's what I wanted to explain in response to most of the questions I got as far as risk is concerned, because I felt that is an area I didn't address for you. And I hope this video helps. I really hope it has opened your mind. That's the perspective here. Of course, if you are interested in working with me for the upcoming sessions, you can join the February 2023 session. Just log into cimascs.com or just reach out to me. You can find all the links and all the ways to reach out to me in the description. Thank you so much. And most possibly, as we are roughly on the 12th of November, most possibly this will be the last video directly focusing on the SCS for the self-study candidates. So all the very best, right? I want to say all the best with your exam. Just don't worry about anything, okay? Whether you've practiced hard, whether you've done enough, none of that matters. On the exam day, all that matters is giving your best. And most of the tools that you need to do that, I feel I have imparted. So good luck. At some point, I hope to see you, collaborate with you, work with you, help you, support you. Take care and happy learning. Good luck with your exam.